Today is Monday, November the 18th. Let's take a look at FinViz. So the market volumes were particularly low. Look at the Dow. Look at the NASDAQ. Look at the S&P 500. This was a really slow trading day. The market drifted sideways, moved up. If you look at the overnight action, we hit a high of 31.2775 at about 2:20 in the morning. So that would have been about 8:30 in the morning European time. So the European markets weren't open, but we drifted down below the Globex low, took a bounce off of there, hit the 61.8% Fibonacci, came down to the 38.2% Fibonacci, and ended right at the 50, right at the halfway mark between the Globex high and the Globex low. So the buyers and the sellers had a tug of war and nobody won. But the advancers and decliners tell a bit of a story. The decliners, 54% to 41%, which is going to take the oscillator now back down below the zero line. So for 2 weeks now we've been churning in here with no decision on moving money into the marketplace. So let's look at the S&P. The S&P was up a small amount, only a couple of points, but still seems to be, riding pretty high. Apple, really interesting. Apple hit our 266.92 Fibonacci. Now we've got a couple of Fibonacci things we're looking at here. So let's go out to a 1 month. Let's go out to a week. And we are looking at this wave, which was the all-time wave from 2000 up to the first registered high of October the 14th. And then we pulled back to 38.2%. So let's just make sure we're looking at the right ones here. So it's this one right here. So we pulled back to 61.8%. So it's a 38.2% pullback. Now we take a look at the next wave, which is this one right here, the green ones. And if we use not this point because it was an exceptional week, but look at these 2 weeks here. So let's say that these 2 weeks represent the low, and this one was sort of an exception. That puts us right at 266.66, the 138.2% expansion Fibonacci. So we are now 38.2% higher than our previous high. If we take our Fibonacci line and move it down to this one, we still don't have much room to go. We're pretty much saying that we're at the 38.2% where there should be some resistance. But look at the volume. Let's go back to a daily for that. And the volume was a little bit low. So the volume was low in Apple. The volume was low all around the market. Caterpillar, still in a pullback stage. Its volume was particularly low and has been since November the 6th. So the whole month of November has been low volume for Caterpillar. Now KL, this is our gold stock that we traded for in place of GDX. Explained that a little bit when I was doing Friday's video. But on Thursday or Friday, I sold all the GDX and thought, if gold is going to make a comeback, and I was in a better position to put all of my money on one miner in particular, which is this Canadian KL Kimberley, which I thought would outperform the gold miners. And look at KL today was up 2.5%, but GDX was only up 1.72%. So far so good. I made more money with KDL than I would have with GDX. And KDL is in this breakout pattern from this consolidating wedge. that we looked at for about a week when it was pointed out by Trader Stewie on Twitter. The next one we want to take a look at is, of course, Whirlpool, continued weakness, almost saved by the 200. It did actually fall below the 200. The Chiku span fell below, it had support on the 50, where we closed on Friday, but now we've fallen below the 50. So Whirlpool is getting less expensive and should be getting attractive at some point. Let's look for support when the Chiku span hits the top of this cloud, which is almost a 68.1% pullback on this Fibonacci here. So this big move up has already come down a half and is approaching 61.8% of a pullback. The next one is WDC. Again, continued weakness in this chip stock. We had support on the cloud for the Chiku span. We lost it, but we held support on the 200 simple moving average. So if we lose that support today, then the stock is really in trouble and it's really moving down. I don't own any WDC or WHR, but I like to keep an eye on them and I'd like to get back into them someday. Anything else we want to take a look at? Amazon. Amazon back into the cloud. I think it's just going to go sideways for a while. Remember on Friday, we pointed out that the top of this candle was perfect support for the Chiku span, which should have called for a bounce upwards, and it did. And it stayed well above this candle. So the next levels of support are either going to be continue to move higher or come down and get support on the top of this candle. So this would be the next level of support, 1742 for Amazon. Nothing to get excited about yet. It's still a stock with an opportunity, but that opportunity is not here yet. Let's just look at some Fibonacci's, and let's take this as our Fibonacci range. And where are we in our comeback? We weren't even able to make it back to the 38.2%. So pretty good weakness there with Amazon. Nothing to buy. And I don't think it's a good stock to short either. AT&T continues to just move higher and higher towards a goal of, I think, 40, where it's likely to meet resistance, and that's going to be reclaiming 78.2% of its high from 2016.